Welcome, everyone, to the Pockets of Knowledge podcast. I'm your host, Desiree Stanley, and with me today is my guest, Anne Dalfiume. How are you today, Anne? It's wonderful to have
I'm
you on.
excellent. Thank you so much for having me. I'm great. Thank you. How are you?
I'm doing very well. Thank you. I am so thrilled to have Anne on the show today. We're going to be talking about financing and navigating that whole process as a startup business to help grow your business. And Anne is the founder and owner of Best Bank Option. And so we're going to be diving into those topics and really help the listeners who are ready to start a business or grow their business understand that financing process. And so I'm so looking forward to this conversation. Are you ready?
I am. I'm so ready. I'm excited.
Excellent. Okay, so I want to ask you, first of all, what was it that inspired you to start Best Bank Option? And tell us a little bit about your history in the banking industry.
Funny, I was thinking about some of the questions that we're going to go over. One of those was a situation where I was working at a bank and we would have morning meeting huddles, right? And everyone would get together with the branch manager. And I was working with the branch manager and with the bankers in this branch, but not necessarily, he was not my direct manager. So we would have these morning meetings and he would start to talk about how to basically work the system. And I remember sitting there and looking left, looking right, and thinking, is anybody bothered by what he's saying right now? I couldn't believe it. Obviously, with a lot of the things going on in the banking system, there was a lot of gaming going on and inappropriate behavior, unethical behavior. And when that happened, and he just kept doing things and kept saying things, and I thought, okay, I can't work with this person because every client that I brought into that office, I introduced them to the branch manager. And I couldn't do that in good conscience. What I realized is, especially being in business for yourself and just being in business in general, it's really about my ethical behavior, right? And it's about my reputation, and it's about how I conduct myself. And being aligned with somebody who was doing unethical behavior, I couldn't do it. So I made a complaint to my manager. I made a complaint to his manager. I asked to be transferred out of the branch and I was denied. They said, no, you'll have to work in this branch for a year, which is typically how it works. And so I said, okay, I'm going to have to leave then. And because that happened, that's what I guess spurred me into becoming a commercial loan broker or a business loan broker. And through that process, it really catapulted me into a whole new world of financing that I didn't know existed. And up until then, I'd worked for different banks. I've worked for small community banks. I worked for large national banks. I've worked for international banks. So I have a pretty good repertoire of different lenders and how they function. And because of that, it gave me a really good broad based knowledge about finance in general and how to help small business owners. But what I really didn't know was it's like what you don't know is what you don't know. When I went independent, it really opened up a whole new world. And I felt like a newbie. I mean, I didn't know the questions to ask sometimes. I felt insecure, even though I've done it for a number of years. I don't want to date myself, but I've been a baker for a long time, for a good portion of my life since I was a child. I was just amazed at the things that I learned. So other people will get the benefit of that. And I'm excited to share that with everyone. So that's how I started.
Thank you for kind of filling in that detail for us on your history. And you're 100% right. Your integrity, your reputation is paramount. And you just cannot align yourself or work with somebody who is doing things that just are not right. And so I think the listeners would totally agree that kind of had to get out from under that. So thank you for sharing that story with us. And so let's talk then about when you did become a broker, you learned so many new things that you didn't know before. And so why don't you share some of that with us now? Like, what were some of the things that you discovered when you began that new path?
Okay. Some of the things that I learned that I did not know before was that even if you have not the best of credit, right? Like, let's say something had happened, or maybe your partner doesn't have very good credit. And I'm talking below a 680 and even below, even in the 500s. I didn't know companies could still get financing, even though they didn't have decent credit. The better credit you have, the better options you're going to have and the better terms you're going to have. But in the big realm of things, if you've had a situation that came up in your past where maybe you got sick and you had to declare bankruptcy because you had a bunch of medical debt, that's explainable, right? So I want people to know that just because maybe you don't have the best of credit history, that you can still apply for credit and still get approved and work your way into getting better credit rating over time. So that was the one thing that I learned. I also learned that, you know, people have options. There's different types of lenders. So I have a large banking background, but in the grand scheme, you can go online and there's a bunch of online lenders now, right? You're able to find financing a bunch of different ways. There's grants, there's loans, there's money through the SBA. There's a plethora of different ways to obtain financing. You just have to keep looking for it. So, there are options to be had and to be available.
Yeah, that's a great point that you just brought up about so much online banking has opened up the availability of funding for people where
Mhm.
just 10 years ago, 15 years ago, maybe longer, it really was just the bank that was in your town, that's
Mhm.
where you went to get any kind of funding. And now we have so many more options. And I love that you shared about SBA because that's a great resource. And the grants as well. Your
Mhm.
local town might have grant options. And really doing a little bit of research there gives you those options. And so thank you for sharing that.
Mhm. I'd actually recently obtained financing for a client of mine, and she was relatively new. She'd been in business for a little bit over a year. She had 1 year's tax returns, and we were able to get financing through SBA. It's not necessarily through a bank, but it's through a community development center. And because of that, she was able to grow her business, relocate, expand, hire new employees. So it is a beautiful way in order to, especially for clients who are newer in the industry, newer in their business, they haven't been in business that long. I'm talking less than 2 years. That's a great way to go.
Mhm. Yeah, thanks for bringing that up because I think that people often assume you have to be like this really well established business. And that's not the case, as you just shared. It could be somebody who is a newer startup business that can obtain this type of financing. So, great point. Thanks again for sharing that. And then I want to talk a little bit about what you shared earlier, and that's the credit score, because I think that that's something else that people just automatically assume if I've got terrible credit score or a lower credit score, like quote unquote lower score, I'm not going to get any financing. But the point that you brought up is that it may not be the best terms or the best rate. It's still an option, right?
Mhm. Correct. Right. So what I've learned going through this process and working with different types of clients who have credit scores, I'd probably say the high 500s all the way up. What you can do is you can talk to different lenders and find out who offers credit for those who don't have the best credit score, right? And like I said, you work on getting your credit score better over time. Life happens to people. Sometimes you don't expect it. And there are things that come your way, whether it's divorce whether it's a tragedy, whether it's a natural disaster, something that you're not expecting. Things happen all the time, right? And it's nothing to be ashamed about. The thing that I would say, and when I talk about people who don't have the best of credit, sometimes people have applied and maybe had gotten just went into bankruptcy and they applied for bankruptcy X amount of years ago. You have to be very careful when you fill out the applications on different loans packages because sometimes the wording can be very specific. So it'll say, have you ever filed for bankruptcy? Then the answer would be yes. Sometimes it'll say, have you ever filed for bankruptcy in the last 7 years? Or it'll say, have you filed for bankruptcy in the last couple of years? So you want to really read that question because if you answer no and you think it's fallen off your credit report, it's going to be an automatic decline. Banks are amazing at finding out information, especially like that. So you don't want to mess with the big brother. You want to keep it all above board. You want to make sure that you're disclosing everything. And it doesn't mean you will automatically get declined. That's the other thing that you could talk to a banker about. Be honest, because if you're not, it's going to come out anyway. And then you could have wasted your time by going into something that might not have been the right fit for you as far as the lender. So,
Mm.
yeah.
Yeah. Thanks for going into a little bit more detail on that. And so then that kind of leads me to the question, first of all, where would I even find the right lender? Okay. And I know
Mhm.
you mentioned, some online SBA, some local community things. But so where I'm sure the scenarios are going to be different in like where I would look for the type of lender that I need for the type of money that I need.
Right. So, this is what I do when I have to find a particular lender. I will Google, let's just say I was working and purchasing a farm for a client. So I looked up farm lending in Colorado. And then that helped me narrow down. And then I would click on those bank links. And then it would say, if you're inquiring, please fill out this little form. So then you fill out the information and then they go ahead and reach out to you. That's one way that I would find lenders. The other way is I utilize LinkedIn. So I will sit there and I will look for local lenders and I will connect with them. And then when they accept my invitation, then I'll send them a message and say, hey, this is what I'm looking for. Is this something that falls into your criteria? And then if they say, yeah, let's talk further, then I give them my number and then we go ahead and discuss what I'm looking for and things like that. The one thing that I want to make sure that people know is if you do live in a small town, you should go with a local lender. Larger lenders don't like going into smaller towns. That's just not their area of expertise. And there's some banks that don't offer business finance at all. So credit unions, things like that, they don't necessarily always offer business finance. So that's why I try to Google it, business finance, and then allow them to connect where I'm at locally looking for things like that. So there's all different types of lenders. And I would suggest people look at different types, whether it's a regional bank, whether it's a national bank, but you don't want to go to two lenders of the same type. And when I say that, I mean, you don't want to go to Wells Fargo and Bank of America. Those are both national lenders, right? And they both pretty much have the same underwriting criteria. So you want to maybe pick one of those. And then you might want to go to a local bank, right? Whether it's like East West Bank, something like that, just so you have a variety and you get an idea of what different lenders are offering for the two things that you need.
Yeah, that's great information, I think, and really clarifying how important it is for finding the type of lender for the type of funding that you need. And again, that point that you made about national lenders, maybe or larger lenders not wanting to go into those smaller markets, that's
Mhm.
something I would have had no idea. So thanks for sharing that detail. And I think also that when you've got a local lender, especially if you're in like more of a rural area or a
Mhm.
smaller town, you're obviously going to have a little bit more of a connection with those people because you're in the same area, right? And so
Right.
you could probably get a little bit further faster with someone like that than a national, like nationwide chain bank or whatever.
Right. I always suggest to people when they're starting to look for financing that they talk to a couple of different lenders. And there's some different reasons for that. One of the reasons is that when you get together your loan package, typically what I do for my clients is that I will have a couple of different lenders look at the loan package. You don't necessarily know how they do their underwriting or how they look at a loan, right? Or your industry per se. So if they look at it and one says no, then you can automatically start working with the other one if that's something that they look for. So you kind of almost have a fallback, right? I typically want to make sure that if I'm going through the loan process, that I kind of have a backup lender that I've already started the process with. So if anything happens during the process, then I have someone else that I can go to and say, hey, it didn't work out. Here's the reason why, right? Like I said, it's full disclosure because they're going to find out anyway. And so you'd rather just save your time and just say, hey, look, this is what they said. Is that going to be a problem for you too? Is that an issue? And if they say no, then you might as well just keep moving forward. But it invariably saves people an immense amount of time when they work with two lenders at the same time. Then there comes a point where you have to make a decision, right? Do I want to go with this lender or that one? Some people, it's how quickly they can process a loan. For other people, they are very rate sensitive. So they want to know if they can get the best rate. So there's a multiple, I guess, criteria of what somebody would consider before they move forward with a particular lender.
Yeah, great point there for sure. The speed of lending could be more important to somebody than the terms per se.
Mhm.
And yeah, that could make a difference in the decision on who they go with. Yeah, 100%. And I want to talk a little bit more about what you said, and that's the loan package. So let's dive into that a little bit and understand kind of what would be in that loan package. Like, what is a lender going to ask me for when I go in to apply for a loan?
Mhm. So typically, if you've been in business a couple of years, they're going to want to see at least a couple of years' tax returns. They want to see year to date financials, meaning your profit and loss and your balance sheet, if you have one. They're going to want to see maybe year end financials. So they'll want to see the year end balance sheet and profit and loss. They're going to want to see a personal financial statement. They'll want to see business debt schedule if there is any. And then they're going to want to see also, depending on what your purchase is, they might want to see bank statements, things like that. If you filed an extension, they're going to want to see the extension. And there's nothing wrong with filing extensions. You just got to be able to show the information for them. But that's typically what they're going to ask for somebody who's newer in business, right? They may only ask for 1 year of tax returns. And so it just depends on how much you're needing, how much you're asking for, and what type of financing you'll need.
Thanks for sharing those details on what you might generally be asked for. And let's talk a little bit about the personal financial statement and what does that mean? And usually, what are you having to share on something like that?
Right. So a personal financial statement, let's say if you have a partner in business, it would have to be completed for each owner who owns 20% or more of the company. If your partner owns 5%, they typically will not ask for their personal financial statement. Okay. So once you look at that, they'll gather information all about you and all about your finances. They'll want to see like where you live. Do you rent? Do you own? How much money do you pay monthly for your mortgage? Or how much do you pay for your rent? How long have you been there? Then they want to see your assets, what kind of cash you have, what kind of stocks, bonds, what kind of cars you have, any other assets that you might have. Then they're also going to ask about your liabilities on any of those assets, right? That's why they want to know about your home mortgage. They want to know about any credit card debt you might have. If you've co-signed for any debt, they'll want to know that. And then they also will ask you some questions really to find out about your history when it comes to, well, one of the questions they'll ask, have you ever filed for bankruptcy? That's one of them. Then they'll ask if you have your assets in a trust. They're going to want a copy of your trust document. So you want to make sure that all of these documents that you are putting together are accurate and up to date. Like sometimes I've gotten trust documents from a client and they're not signed and they're not dated. You got to make sure those are done, or even corporate documents, right? They may have their corporation, but they haven't signed like whatever their meeting minutes or something like that. There's different things that you just want to make sure that everything is, you know, the T's crossed and the I's dotted, so to speak. So,
Yeah. Well, thank you for sharing that. And it sounds like it's a lot of documents.
yes.
Typically, there's a lot of things that you're going to need to be getting together to provide so that they
Mhm.
have a full picture of your financial situation.
Correct. Right. The best thing to do is kind of get organized. If you're not an organized person, just putting a folder together, right? Wherever it may be in Dropbox, doesn't matter. But if you put all the documents that they're requesting and you keep it in that file folder, it will save you so much time and energy because they're going to need that info. And for some reason, if you need additional funding, right, then you could just go back to this file. And then you're like, oh, look, I've already got it all together. Look at me. I'm a superstar. So, so you just want to reference back, but it makes life so much easier. And that's what I do for my clients. I've had some repeat clients where we've gotten financing a few years ago and then they'll need something today, let's say. And so I just get updated financials. I get the newest tax returns, things of that nature. So yeah, it makes it a little bit easier.
Yeah, and you're right. The time saving and doing something like that where it's all compiled in one place is
Mhm.
huge because I think we spend so much time searching for the things that we need because they're not all in one place. And so I think that's a great tip. Just keep all of those things, like you said, a Dropbox or Google Drive or a file folder on your computer, whatever you feel comfortable with. Putting it all in that one place makes so much sense. So thank you for sharing that tip.
Yes, definitely.
Let's talk then about how do you know how the process is going? Like once you've provided all of that and they start working on it on their side, how do you have any idea if it's going well or it's not going well?
I think one of the things to really talk with a lender before you even begin the process is asking those questions, right? What is the process? When I apply with this bank, what's the process like? And then they should tell you how many days it'll be in underwriting. And then they'll tell you exactly what happens after that and what to expect. So I would say a lot of lenders, they might take 5 to 10 business days to underwrite something. And you should get questions back from the underwriter. It's rare that I've never gotten a question back when they look at a financial package. So when your banker is communicating with you and talking with you, you have a pretty good idea. Okay, things are moving along. When you reach out to your banker and if they are ghosting you, and they don't get back to you, they're not responding to your emails, right? Then that's something to probably start being concerned about. The other thing I ask your banker is if they plan on going on vacation anytime soon, because I can't tell you how many bankers have left town and then I'm trying to reach them and like, oh, hey, I'm, in Mexico. And I'm like, well, that would have been good to know, right? So, maybe ask, do you have any trips planned, in the next month or 2 months and see what they say. Then that way you'll know what to expect from them. But the thing that makes me gauge how we're doing and how it's going is if someone stops communicating with me and I'm reaching out to them, then I know there's a problem and I need to start looking at an alternative lender potentially. So,
Yeah, I love it. Great points there. That initial question of what is your process? As the lender, what is your process and what can I expect? And hearing a response back, I think that's just even a great place to start. but that's hilarious. If they're ghosting you, yeah, there's probably something that's not right there. And
Yeah.
yeah. And going back to your point about working with 2 banks at the same time, initially, because you can save time if you've got one is just giving you, no problem after problem, you're not getting anywhere, you can easily just switch over to the other and keep going without losing too much time, and I think that that's
Mhm.
a great point because you don't wanna have to start from square one again and, potentially be, months and months behind. So, good
Right.
points.
Or lose your opportunity, right? I mean, the thing about business finance is that it's very time sensitive and it's very stressful, right? These are people's livelihoods that we're talking about. They're able to take advantage of different opportunities that are coming towards them. And in order to do that, they need their financing. And if there starts to become hiccups and they're pushed up against the deadline, that's a problem. So I think a lot of bankers, we do a lot of theoretical work, when you're at a bank. Rarely has a banker actually ran a business, like
Mm.
started one from scratch and ran it, right? So in their mind, they think everything should be smooth. See, it's like cash flow's great. There's no ups and downs, right? Everything's kumbaya and and we're at one with the world. And that is not the way the world works when you run a company. It just doesn't work that way. So sometimes they're going to want to know, hey, what do you do in this situation? How do you overcome that? I know one of the biggest questions post COVID was when COVID hit, what did you do? How did you navigate that? Right. And so these are things that you want to be able to think about and be able to answer. So when they do come up, you're prepared, you're ready, and you sound really like you know exactly, hey, this is my company, and I know exactly what's going on, and I know how to answer your questions.
Yeah, great point. For sure. Having just your own knowledge of the total ins and outs of every part of your business is a must, and being able to answer those questions quickly and easily is absolutely necessary. And yeah, great point about post COVID because I think that those couple of years were really really stressful for a lot of businesses, and a lot of
Mhm.
businesses did not make it. And so I think that going forward it's probably gonna be different, right? I think there's probably been changes that have occurred because of COVID in terms of what happened in the banking business or not, and what would you say?
Well, right after COVID, yes, a lot of things changed. I mean, banks weren't lending to non clients. I
Mm.
mean, it became very tough. It all became about EIDL and PPP loans. That's really what they were processing for a long time. And other than that, they weren't doing anything else. I mean, I had a client who was basically processing COVID tests, like manufacturing them, and I could not get them financing for the life of me because banks were just like, "Oh, no, sorry. We're not doing that right now." And I'm thinking, this is something to help us where we're at. It was just amazing to me. So, yeah, there's just a lot of intricacies. I think right now, with the way the economy is, inflation's going up. People are worried about that. The dollar does not stretch as much as it used to. Things have gotten more expensive, right? So thinking about that and costs, if you're in manufacturing, you want to think, okay, how can I cut costs in the purchasing of supplies? If you're a wholesaler or a retailer, you want to think about, okay, well, what goods, how much are the costs are? Can I get a better terms on what I'm purchasing? Just different things like that. So those might be questions that lenders might ask right now and want to really have a decent answer for it. None of these things are set in stone. I want people to know that you may not know something and it's okay to write it down or have them email you with these lists of questions. And then you can talk to, your tax lender, whether it's your CPA, your controller, your financial person, Then that way you can get the right information. Not everybody is a financial person in their company when you own it. They might be good at something else. I don't want people to go, oh my gosh, how am I supposed to know all that? You don't have to. It's okay not to know the answers. So, but you got to get them. You may not know, but you got to get them.
Yeah, no, that's an excellent point that you just brought up because in some cases you do wear all the hats, right? You are the one that has to handle all aspects of the business, but that's not the case for every business. And so, yes, you're allowed to have some time to get answers to questions that are thrown at you. That's a great point and a reassurance, I think, that, it's like if you don't have an immediate answer for it, they're just gonna be like, okay, no, forget it. We're not financing you because you can't answer this question right now.
Right.
That's not happening.
No.
Yeah.
No. They want to lend money as much as you need the money. So it could be a
Right.
win-win.
Right. Right. That's a good point. And although I feel like right now, the situation that we're in, and I'm going to just say it's the fourth quarter of 2023. So, this episode, if somebody listens to it in the future, could be entirely different scenario. But I feel like lending right now has become a little bit tighter. Like there's not as much lending that's happening because of, inflation and interest rates and all of the stuff that's kind of going on with our economy right now. And what are your thoughts on that?
Oh, I agree with you wholeheartedly. Yeah. Everybody's tightening it up a little bit because, nobody wants to get stuck with a bad debt, and that's the thing about lenders, right? They're risk adverse. They not only look at the company today, but where it's going to be over the term of the loan. So they don't want to provide money to a company that they're going to have to worry about going forward. So I completely agree with you. It is about if you think we're in a recession, but it's the bottom dollar is not buying as much as it used to. Banks do have a tendency to tighten up and to not give as much as they normally would. So it causes a cash crunch for a lot of different industries, a lot of different people, right? So you just got to really be willing to batten it down a little bit and just really navigate this time going forward.
Yeah. Great point. Well, so then I want to ask you what, when you get to the point that they've reviewed all of your information and they're like, okay, great, we're going to fund this loan that you're requesting. What are some questions that you should be asking them at that point?
Well, once they've approved your loan, right, and they're going to move forward, and you're past the part of supplying all your documentation, whether it's corporate documents, meeting minutes, trust documents, your certificate of information, different things like that, whatever it may be that the bank needs, or maybe they need a copy of your insurance for some reason. Once you've supplied all of that information, the things that I would ask your banker are one, would you be able to see your loan online? Because sometimes that's not always the capability of doing that. Two, how do you make your loan payments, right? Sometimes they're automatic withdrawals. So you wouldn't have to worry about that, but you just want to confirm so that you're not late on the payment. And then you want to find out when your payments due. So that way you have enough money in the bank. You want to make sure that all those things are answered. So you go forward, you're like, okay, I know exactly what's happening. Cause I know in hindsight, people have come back and said, I don't know how to make my loan payment or I don't know what my loans do. What am I supposed to do? So then we have to go back to the lender and ask them afterwards. This will be just something that makes it more convenient for you and you don't have to come back to the table afterwards. So.
Yeah, and I think that that knowledge is important anyway, because then you know exactly what's due, when it's due, and how to make those payments. And so it's like one less thing to worry about because
Mhm.
you've already got that information. And yeah, I mean, being able to make those payments online is, I think we kind of all expect that these days, right? Like having
Oh,
that,
yeah.
not having to, write a paper check, like who does that anymore to make a payment. So those
Mhm.
things, it's of course super beneficial to know how it needs to be handled going forward.
Right. And
So
you want to
yeah.
know too if it takes a couple of days to get that payment processed because I like to pay things right when they're due. But if it takes a couple of days in order for it to get processed, then you're going to have to make your payment a couple of days ahead. And then you have to think, oh, is it the weekend? That's a couple of more days, right? No payments get processed on the weekends. No payments get processed on a holiday. So these are things that you want to think about, just so you're not late because you're building your credit here and you're building history with the potential lender in the future.
Great point. Absolutely. Love it. Well, and let's talk now. If there's anything that you think that the listeners should know that, like in hindsight, that now that you could share with the listeners that would be beneficial to them, I'd love for you to share that now.
Okay. I think something specifically that a lender is going to ask someone when they first meet with any potential business client is they're going to want to ask a few different things of you. One, they're going to want to ask, how much do you need? So, how much money you need? Now, I'm going to say the not right answer is, how much can I get? Right? Like, that's not, that's not the right answer. And then the other not right answer is giving a very wide range. Like say, I'm thinking maybe 50, 250,000, somewhere there. You want to have some idea of the amount that you're going to be asking for, right? So that gives you a little bit of homework to do before you actually speak with a lender. So you want to know how much. The other thing you're going to want to know is what you're going to need it for. If you're a new company, let's say you need marketing, and let's say you need to hire staff, or let's say you need to lease a space, right? So these are all information that you want to make note of. You put it in your Excel spreadsheet. You say, okay, this is how much the lease payment's going to be. This is how much the approximate utilities are going to be, right? This is how much insurance is going to be. So you want to have all this information, and it doesn't have to be exact, but you at least want to get a pretty good, decent idea of what that amount is going to be. And then the other thing you want to know is when you're going to need the financing. I think a lot of people put themselves in a little bit of a corner because they don't give themselves enough time to go forward into a business loan, right? So the one thing you don't want to say is, I need it today. Okay, that's not going to happen. Like, wrong answer again. The other thing not to say is, I need it as soon as possible. So you want to be as prepared going in to talk with a lender as you can. So you want to have these ideas, how much you need, what you need it for, and when you're going to need it, right? So if you say, I'm going to need it in a few months, we're planning on expanding. This is my ideas. It doesn't have to be all completely tied together at that point, but at least it gives you a really good idea of a conversation you're going to be able to have with them. So that's the important thing, I think. That's something I think people should know.
Oh, excellent. I love it. For sure, the point that you made about not having too large of a range that you're looking for, or even just saying like, "Well, whatever you wanna give me." I mean, no, that's not gonna instill any kind of confidence in the lender, I think. But going in prepared, like you said, and having just a general idea of like, I'm looking for this funding for leasing a larger space or, hiring staff or, whatever like that. I think that instills more confidence in the lender that you're prepared. You know what you're gonna be using the money and you're using it responsibly, right?
Right. hmm
Yeah.
Yeah.
Excellent.
And definitely you can have some educated conversations at that point, right? When you're just kind of shooting darts saying, well, I think it's about this much and I'm not quite sure. Those are harder conversations to button down and to give you quality feedback on, as opposed to when you come in and you say, this is what I'm thinking, this is what I need, and this is when I need it. And I want to really try and emphasize too that preparation is your friend. And so the more prepared you can be going into a financing opportunity, the better it's going to be for you as a business owner. And I always tell people, would you like to give the bank your money or would you like to keep it? It's going to be one or the other, right? So when you negotiate rate, terms, fees, things like that, that's the other thing I would suggest that people ask when they might say a specific rate, or they'll tell you, these are the fees we charge, things like that. Ask if those are negotiable. A lot of people don't ask. They just say, oh, okay, well, it's what the big charge is. We're going to just pay it. No, just ask. The worst they're going to say is, no, those are not negotiable. Okay, great, right? But a lot of times these are negotiable items. If you bring over more deposits, sometimes you can negotiate your rate down. Or maybe they're having a promo and you can get a lower fees than what you normally would get. So it never hurts to ask, right? Never hurts to ask.
Yeah, I love it. That's a fantastic point. Unless you ask, the answer is always no. And
Mhm,
so, and there's no harm in asking. I love it.
mhm. Yeah,
That applies to
definitely.
everything, this included, right?
Right. Exactly.
Well, Anne, thank you for sharing those final tips with the listeners. I really appreciate it. They're great points to remember and keep in mind going into this process. And I always love to ask my guests if there's any books that or podcasts that you've read or that you listen to that you think would be beneficial for the listeners to check out.
Well, honestly, I think being a business owner is a little bit of a lonely, can be a little lonely sometimes. I mean, I talk with people, but I don't know. I get a little lonely. So I like to listen to Audible when I go on walks and things like that. And so I've been listening to a lot of Bob Proctor lately. I've been listening to basically sales books, Wolf of Wall Street, different things like that. But that's what I've been listening to recently is a lot of Bob Proctor.
Excellent. Well, I'll include that in the show notes so that the listeners can take a look at that. And how about podcasts? Do you enjoy listening to podcasts? Is there anything you'd like to share?
I haven't listened to too many podcasts lately. Not a preference or anything. I just haven't listened to any, but I've listened to yours.
Thank you. I appreciate that. Well, Anne, thank you for your time today. But before we wrap up, I would love to have you share if people have further questions about what we've talked about or want to pick your brain on more of this, how would they reach out to you and ask you those questions?
Sure. I am on LinkedIn. That's under Anne Dalfiume, which is a little hard to spell, by the way. Or you can look up Best Bank Option. I'm also on Twitter, so you can follow me there and you can also send me a message. And I'm also on Instagram at Best Bank Option. So any one of those ways you're able to get a hold of me.
Excellent. And I will for sure include all of that in the show notes so that it's easy for the listeners to access. And thank you again for sharing your knowledge with us on this topic because it can be super confusing and understanding like what you need to be prepared to respond to for the lender. I think it's huge in making this process go smoother. So thank you so much for sharing that with us today. I
My
appreciate it.
pleasure. Thank you for having me. It's been great.
Awesome. Well, we'll talk more soon.
Okay, sounds good.